Quotex trading can appear simple to beginners because the basic concept involves predicting whether an asset's price will move higher or lower within a selected expiration period. But successful trading requires much more than identifying a few bullish or bearish candles. A beginner should first understand that digital options trading carries significant financial risk and that no Quotex trading strategy can guarantee consistent profits. The most practical approach is to develop a structured method based on trend identification, support and resistance, technical confirmation, disciplined entries, and strict risk management. Before considering real money trading, beginners should use a demo environment to become familiar with charts, indicators, order placement, expiration periods, and the psychological pressure associated with making repeated decisions. A simple strategy can begin by identifying the dominant market trend through price structure and a moving average. When a market produces higher highs and higher lows, the trader can focus on potential bullish opportunities, while lower highs and lower lows may indicate a bearish environment. Support and resistance can then provide important areas for identifying potential entry zones, because price often reacts when it reaches previously significant levels. However, beginners should avoid assuming that every support or resistance level will hold. Additional confirmation can come from a momentum indicator, such as the relative strength index, which can help traders understand whether momentum is strengthening or weakening. For example, a potential call setup may involve an established upward trend, a pullback toward support, and bullish momentum returning after the pullback. A potential put setup could involve a downward trend, a movement toward resistance, and weakening bullish momentum. The important principle is that several conditions should align before considering a trade rather than entering because of one indicator alone. Beginners should also understand that trading frequency does not determine strategy quality. A strong trading routine may involve waiting patiently for a suitable setup and completely avoiding markets where price action is unclear or moving sideways. Risk management is equally important because an unsuccessful digital options trade can result in the loss of the amount committed to that position. Traders should therefore establish a fixed risk limit before entering any position and avoid increasing trade sizes to recover previous losses. Martingale-style strategies can create particularly high exposure during consecutive losing trades and should not be treated as a reliable solution to losses. Maintaining a trading journal is another valuable practice because recording the asset, time frame, market conditions, entry reason, expiration, and outcome allows beginners to evaluate their strategy objectively. Over time, the trader can determine whether the approach performs better during specific market conditions and identify recurring mistakes. Ultimately, a professional Quotex trading strategy is not about finding a magical indicator or predicting every market movement. It is about creating clearly defined rules, testing those rules, controlling risk, avoiding emotional decisions, and continuously evaluating performance. Beginners who focus on education, demo practice, disciplined execution, and realistic expectations are better positioned to understand both the opportunities and substantial risks involved in short-term digital options trading.